Assalamu Alaikum everyone, welcome back to another video. I hope you're having a wonderful day. So for the month of November and December, a lot of the companies have basically increased their dividends, and as you know me, I love dividend increases. My portfolio is a dividend growth portfolio, or at least I'm trying to. And yeah, what we're going to do today is look at 7 different companies that are high quality businesses, in my opinion, that have increased those dividends. And I've always said to you guys, why is it important for us to actually buy dividend growth companies? Is because the fact that you will, inshallah, one day get enough income from those, dividends to live off. And I've seen people that have done it. It takes a long time sometimes, but as long as you have a goal and you have a plan. So for example, one of the people that I actually spoke to, basically a long-term investor, and we were talking about, in terms of like, can you actually live off your dividends? And he was like, do you know what? Yes, you can, but it all depends on where you're planning to retire. If you're planning to retire in the US, or if you're planning to retire in the UK and of those places that are very expensive, then you're going to need a, 2 million portfolio. But if you are looking for, say for example, places in Malaysia and Thailand, or somewhere nice and tropical and life is beautiful, or somewhere in Africa, somewhere in Asia, there's so many places outside the Western world that you can live that are actually, you probably need a portfolio size of maybe 600,000, 500,000 to 600,000, returning 2,000, 3,000 pounds a month of dividends. And it is doable. It absolutely is doable. And inshallah, I'm going to try. Inshallah, see how it goes. But I'm going to share with you guys those dividends that the companies have increased those dividends today. But if you haven't actually joined us in the Patreon account, please do so. It genuinely helps the channel overall, and of course you get a lot out of it, inshallah. You get the things like the family portfolios, basically, that where I share my family portfolio is not public. I don't share it on YouTube. I only share it on the Patreon account. So you get access to that. You get access to of course all the high quality dividend stocks that I normally put together every few months. So I'm now working on that. The dividend, you get the monthly undervalued dividend, basically stocks. So I'm updating that for the January month, inshallah. And then you've got, of course, the Discord. Discord is genuinely becoming a really good place for a lot of brothers are sharing very good practices on daily basis. And then you get the Sharia compliant investing ebook, which if you are new to investing, that will definitely help you. You got the dividend trackers, you get the watch list, which I've updated already for the US one. I'm updating the UK one, inshallah, in the next couple of days. And then you got the ETF trackers as well. So you got plenty of things that you can get your hands on, inshallah. Let's get started the video, because I don't want to make it any longer than it needs to be. And the first company we're looking at today is the Mastercard. Mastercard has increased the dividends for the last 12 years, and recent increase was 15%, which is absolutely amazing. For the last 5 years, we're looking at about 17%. Annually, you get $3, and dividend safety from safe dividends. Simply Safe Dividends is actually 17%. 99%. And the 5-year growth rate when it comes to compound annual growth rate and EP, and for revenue and EPS, both of them about 11%, 17%, which is absolutely amazing. Check this out: profit margin 45%, return on equity 179, return on invested capital 60%, free cash flow over $12 billion, total return the last 10 years 20%, which is really great. And they're expecting the earnings to grow double digits for the and EPS for the next year, inshallah. 13% when it comes to premium. Right now is expensive, little bit expensive, about 13%. $465 per share is where they think the price should be. Right now is $525. The next one is another one that I own in my portfolio, very new, little bit still expensive, but probably one of the best companies out there when it comes to dividend growth. So they've increased it by 10%. Payout ratio is only 41%, which means basically for us that they will continue increasing that dividends, inshallah, in the long run, because they're using about 41% of their net income to actually pay off those dividends. So they have room to grow if they need to, and the 5-year average is about 9%. They have increased this for 20 years, so another 5 years they will become a dividend aristocrat, which is absolutely amazing, right? Annually you get $3.30. Safety is 80%. The 5-year growth rate, revenue and EPS 7% and 8%. profit margin, return on equity, return on invested capital is one of the best out there. Free cash flow $2 billion right now. Again, it's $81 billion market cap. So total return is 16% in the last 10 years. Growth expected to be about revenue about 16%, EPS about 10%, which is absolutely amazing, and 12%, like I said earlier, premium right now. $181 per share is where they think the price should be. It's about slightly $20 or so higher than that right now. The next one is CubeSmart. This is a REIT, and this is one of the companies that I have had on my watch list for quite some time. I was put off a little bit about REITs, but I think 2025 I'm gonna start looking at it basically into a couple of REITs, because I do like the REITs, and I think for a dividend growth portfolio in the long run, I think I'm gonna have to have some REITs. Whether I hope I can find an ETF that is basically Sharia compliant, and there is one in the UK. In the US we talked about last video. If you haven't seen the videos about, by the way, the ETFs, go and watch that first. Especially if you are new to investing, it genuinely will help you a lot. But yeah, so REITs, I think I'm gonna have to potentially add a couple of REITs into the portfolio, and this is one of the ones that I've looked at. The other one is a Mid-American apartment, which is basically a company that I had in the family portfolio not long ago. Both of them are Sharia compliant as we speak. So this one has got about 10 billion market cap right now. The UK REITs I don't like as much. They are very small cap and they're quite volatile. I might start looking into a couple of UK ones as well, just to do a little bit more research on overall REITs, and then I'll share that with you guys, inshallah. It has a narrow economic moat, $42 per share right now, dividend yield of almost 5%, and a lot of people actually buy REITs for this reason. Right now, if interest rates go down, okay, if interest rates go down, and that means also the bond basically, because right now interest rates are quite high. There's companies that are paying, I don't know, 5% when it comes to putting your money in the bank, and the bank will give you 5% or whatever. If that stops happening, then of course these companies will do well. If bond prices and the bond prices come down as well, but I think right now is the 10 years about 5% or something percent. If that comes down, REITs will be a lot more attractive. Okay, and the fact that REITs have not done well over the last couple of years, potentially they might be doing well next couple of years if basically interest rates come down, if bond prices, or basically REITs will do generally better. So 77% when it comes to payout ratio. Payout ratio for REITs are expected to be up to 90% because they, by law, they have to, kind of thing. Latest increase 2%. The 5-year growth rate was 10%. Dividend streaks of 14 years. Annually, you'll get $2.08. Dividend safety of 61%. Anything above 61 is good, safe. Okay, the revenue and EPS, they grow in that revenue, and I think it's not, this is AFFO, so rather than this one here, rather than EPS. Okay, so because REITs we don't really use EPS, we use AFFO, so that's what we use in here. Profit margin 37%, 14% return on equity, 8% when it comes to return on invested capital, over just $500 million of free cash flow right now. Total return 9%. Revenue growth up, basically we're expecting about 3% next year, 2% when it comes to EPS. Fairly valued, $47 per share is where they think the price should be. Right now it's 42, so it's slightly higher, heading towards undervaluation, which will be interesting to see. The next company we're looking at is Abbott Laboratories. This is one of the oldest when it comes to basically pharmaceutical companies out there. This is basically they had a spin-off called AbbVie. So it's a spin-off from Abbott Laboratories. 196 billion market cap right now. As you can see, they increased that dividend 7% latest. The 5-year growth rate of 12%, which is absolutely amazing, and 52 years of increase in that dividend. So they are a dividend king. Annually you get $2.36. Safety 90%. The 5-year growth rate in terms of EPS, in terms of revenue, both of them are absolutely fine. Profit margin, return on equity, return on invested capital, really good. $6.4 billion of free cash flow right now. Total return in the last 10 years, we're looking at about 11%. They're expecting the earnings to grow about 7%, revenue to grow 7%, earnings to grow about 10%, and 8% premium right now. $104 per share is where they think the price should be. A solid business, is still increasing, excellent free cash flow, they're still growing, but slightly expensive right now. The next one is the big one, is the Broadcom. Broadcom has been around for quite some time, and it's been one of the best dividend paying companies for quite some time. And as you can see, they've increased it basically by 11% latest and 45% when it comes to payout ratio. 14 years of increasing that dividend for a company that is doing absolutely amazing when it comes to price appreciation. You wouldn't think basically they have been paying that dividend for 14 years in a row, or increasing it for 14 years in a row. Right now, look, check this out: $1.1 trillion company. Annually, you get $2.36. Safety 67%. The 5-year growth rate in terms of EPS, in terms of all of these things, are absolutely amazing. Nothing to worry about. $19 billion of free cash flow right now. Total return the last 10 years, we've seen what the company has done just this year, 38%. Growth estimate expected to be about 19% next in 2025. And EPS is expected about 30%, which is absolutely amazing. 24% premium right now, $190 per share is where they think the price should be. The next one is Merck, another one that I own in my portfolio, 149 billion market cap. They have a payout ratio of 41% at over 3% dividend yield. This is one of the highest on this list, other than Basic Cube. 5.2% when it comes to the latest increase, the 5-year growth rate of 9%. Dividend streak of basically 12 years, $3.24 is what you will get. Dividend safety, we're looking at about 90%. Which is absolutely amazing. The 5-year growth rate in terms of EPS, in terms of revenue, is absolutely amazing. Nothing to worry about when it comes to profit margin, return on equity, return on invested capital, free cash flow, almost $15 billion, which is amazing. Total return the last 10 years, 8%. They're expecting the earnings to grow about 5%, and EPS to grow about 5%, earnings to grow about 10%. 23% more like. 18% discounted right now, $120 per share is where they think the price should be. Really solid business, genuinely. When you look at it from free cash flow, the growth expectations, the total return in the last few years, the fact that it's discounted right now and is still increasing that dividend, this is probably one of the best pharmaceutical companies out there, and it still will be. And potentially, if it keeps going down, I will be adding to it, inshallah, because I do own basically few shares of this company. And final one is another one that is a dividend growth company, that is EOG Resources, another recent addition to my portfolio, 67 billion market cap. They have a payout ratio of only 30%, and they currently they basically trade dividend yield of 3.23, which is absolutely amazing. 7% was over 7% latest increase, 33% when it comes to the 5-year growth rate, but they've only been increasing that dividend for the last 6 years. You get almost $4 for every share that you own, 82% safety, and everything else seems absolutely amazing when it comes to this company, including free cash flow, the total return the last 10 years. The only issue is revenue is expected to be almost flat this year, basically coming year, and then basically expecting the EPS to decline. Now, this can easily change because the oil prices, these companies do kind of depend on a lot of oil prices. If oil prices go down and there's a bit more demand for it, this can easily change. But right now it's fairly valued, $126 per share is where they think the price should be. So that's the 7 companies that I wanted to share with you guys. There were other companies that are reported, like for example, Visa was reported, Zoetis was another company that have reported and have actually increased and not reported. So yeah, there you have it. That's the 7 companies I wanted to share with you guys. All solid businesses, excellent free cash flow to help them grow that dividends. They are growing it fast. They have been growing over the last 5 years, and of course the current yield might not be high enough, but for some of them, but they are actually growing that dividend, which is more important. Okay, the dividend growth companies, that's the most important thing. And when it comes to Sharia compliance side of things, you've got absolutely nothing to worry about. Majority of the companies are doing well. This one has got slightly interest-bearing debt, which is kind of basically expected for a REIT, basically. Overall, really good companies. And yes, like I said to you guys, I do own some of these companies. Just to be transparent with you guys, I'm going to quickly show you these companies in this portfolio here. So Broadcom, we talked about this. That's probably one of my biggest the biggest holdings in my portfolio. The next one is what else have we seen? Mastercard and Merck, for example, both of them are here. And what else do I own? EOG is actually here, and then West Management, which is basically another new addition to my portfolio. Anyway, that's what I wanted to share with you guys. I hope you enjoyed this content. As like I've always said to you guys, it takes a lot of time and effort to put these things together. I would genuinely appreciate if you can join us at the Patreon account, where you get access to a lot of things and it helps the channel, inshallah. Have a wonderful day. Happy New Year. Assalamu Alaikum.